Hi, I'm Chase Wilsey. I'm with Wilsey Asset Management, and welcome to today's Smart Investing Daily Briefing. New rules came out for retirement accounts, and I actually really like this rule. Brokers and advisors are now held as fiduciaries for those retirement accounts. I do want to point out this rule is effective January 1st, 2018, so we still got some time. Be on the lookout for brokers that charge on a suitability basis, because we look at fiduciaries versus suitability. Those are the two standards we look at. Fiduciary always puts the client's best interest in mind. Suitability, the product just has to be suitable. It can be the most high-paying mutual fund, but as long as it fits the suitability of the client, the broker can sell it. One thing I want to point out here is the rules do not apply to non-retirement accounts. So those brokers can still sell these high commission products in those non-retirement accounts. And finally, these brokers are not too thrilled about this because it's going to hurt their commissions coming in. So there's going to be some loopholes that people are looking for. I'm sure the document's about 100 pages long. And kind of one area of concern I have is brokers can still make these products, these high commission products, seem to be in the client's best interest as long as they put the work in and say, you know, we thought it was, and we let them know what the fees were. So I mean, just be on the lookout for those brokers trying to sell you those products with high commissions. I do want to point out here at Wilsey Asset Management, we are a fiduciary firm, so we always put our clients' best interest in mind. Company of the day today, Alaska Air Group, and this has been a great investment over the past few years. Going back a year, 52-week high is $87.17, 52-week low $58.15, current price $78.08. Reason I want to take a look at this company, they recently acquired Virgin America. The deal was worth about $2.6 billion. Two ratios that are going to be affected by this deal are their debt to equity. I did take a look at their current balance sheet, and they only have $1.3 billion in cash and short-term investments. That means they're going to have to take on some debt. Last quarter debt to equity for them was 28.45%. Curious to see what that looks like next quarter, how much they had to borrow to acquire Virgin America. Other thing that's going to be affected here is price to tangible book value. Right now it's a very attractive ratio of 4.1. However, they're going to take on some goodwill from that acquisition. So curious to see how these two ratios look at the end of next quarter. Rising oil prices, big concern for airlines. We think energy is going to go up, and rising oil hurts the profit margin for these airlines. So you have to find an airline that has a good hedging program against oil. Really important for the investor to understand that. And then finally, let's look forward on those earnings going out to December 2017. Estimated earnings per share on a GAAP basis, $7.80 gives us a target sell price of $128.70. Estimated return of 64%. So that is attractive. However, you really have to understand, one, this acquisition, and two, that hedging of the oil. Otherwise, I do like the numbers here for Alaska Air Group. Well, thank you for joining me today. And as I'm sure, as you're learning, this investing thing is pretty tough. We want to come in for a free consultation. We like to call it a conversation with my dad, Brent, and myself. Go to our website, smartinvesting2000.com, or give us a call at 858-546-4306.